Hi guys, this is Mark Shaws, the Pattern Trader here, and in the last couple of days I've made some amazing calls in the market. On Thursday I did a special webinar where I recommended shorting the stock of Red Hat, ticker symbol RHT, and you see it here. By the way, this is my live trading account. I don't normally like doing this, but recently I've been sharing some of my trades. And there's still some people out there that are very skeptical. They're saying that I'm sharing like photoshopped images, and so while I don't really like to do it, what you're seeing is a live trading screen of my live account. You can see this is on Fidelity. It's on an Active Pro platform. Here is my name and my account number. And hopefully the account number has been blurred out by my team. You can see over here the account summary, again my account name, the gain and loss for today, and the total account value a little over $1.5 million. So this is my live trading platform, and I'm going to share with you some of my closed out trades. So again, on last Thursday's webinar, I recommended shorting the stock of Red Hat when it was trading over $166. You can see that it's trading in the market just 2 days later at $139, some $27 lower than where I recommended it. I also recommended buying puts in Red Hat. I bought the 167.5s at about $5. I made about $20,000 on that transaction. I also on the webinar recommended buying the 162.5 puts. They were trading in the market at $210 for each put. By the time they went off the board on Friday, they were worth over $2,000 or 10 to 1. Now I'll share with you my closed positions in Red Hat. I took a very small position. I was very cautious. I bought 10 puts for a total price of $5,000 and blew it out for $18,000. So about 3 to 1 on that. But I played it very conservatively. It was a mistake. In hindsight, I bought the 167.5 puts. They were actually in the money. For these kind of plays, you want to buy out of the money puts and risk a little bit more. And then I also covered in the aftermarket when the stock dropped about $18 in the aftermarket. I thought that was pretty good. I covered the stock just to lock in the position, and the stock ended up going a lot lower. So I netted out about $17,000 on about a $5,000 bet. So about 3 to 1 on an overnight position in Red Hat. Now on Friday night, and I'll show you exactly what I did and why I did it in a minute, I recommended shorting the ticker symbol CCL. This is Carnival Limited. Carnival Limited was going to announce earnings before the market opening. So on Friday in my email, I recommended shorting the stock of Carnival or buying the 63 put options. You can see here that I bought the 63 puts. I bought 75 of them for a total of a little over $8,000. And by the time the market opened, the stock cratered about $6. I had covered my options between $4 and $5.60. I paid about $1.10 for them, so I made anywhere from 4.5 to 5 times my money, literally overnight. So you can see I paid $8,000, I made $30,000 for a total profit of $22,000 in just a few minutes before the market opened in Carnival Limited. Now I'll share with you why I was looking at those opportunities on the price charts. Now I'm going to share with you my analysis of both Red Hat and Carnival Limited and what led me to make those predictions that resulted in such enormous gains in such a short period of time. In this particular screenshot, you see the email that I sent out to our members Thursday afternoon, just ahead of 4 o'clock close in Red Hat. Again, it was entitled Red Hat Pre-Earnings Alert. And you can see on the chart, I analyzed that the price pattern, the price action in the stock of Red Hat was revealing a double top at about the 177 price level. together with these two separate shoulders. So you had both a double top and head shoulders price pattern, both of which, to my mind, were extremely bearish and forecasting a huge decline in the stock. At the time of my email, the price of Red Hat in the market was trading a little above $166 in the market. As I just showed you, it's under $139 presently, or about $27 lower, just 3 days after I predicted that the stock of Red Hat would fall. You can see in this email, under the email, I recommended sell the stock short at the market or buy put options. In this case, it was an extremely conservative put option at 167.5, which meant it was slightly in the money when the stock was trading at 166 at the time. In hindsight, I should have gotten more aggressive, but I did make 5-to-1 on my recommendation. In my webinar on Thursday, I recommended buying the 162.5 put options for $2.10, and they went off the board on Friday over $20. So you could have made 10-to-1 on this recommendation in Red Hat. This is an email that I sent out to my members on Friday at 1:43 p.m. in the company CCL, Carnival Corporation. The reason I sent it out on Friday was that Carnival was going to announce their earnings before the opening of trading on Monday morning. And so this was sent out Friday afternoon, 1:43 p.m. And again, I shared my analysis where over the long term, you can see that Carnival Limited has established a double top at about the 71 to 72 price level. Together with these two shoulders right here, I surmised based on this double top and head and shoulders that based on whatever the earnings came out, as it turned out, the earnings were higher. The earnings actually beat estimates, but you can see that the price pattern was actually indicating that the stock would move lower no matter what the outcome or the news. So in this case, like I said, the earnings actually beat estimates. They should have been favorable, but the stock plummeted $6 on Monday. And the put recommendation that I recommended on Friday, I bought these 163 puts at $1.10 in my own personal account and covered some of my positions at $5.60. So I made over 5-to-1 on my investment just from Friday afternoon to Monday morning. So 500% literally in less than one trading day based on my analysis of the decline in the company CCL Carnival Corp. All right, I'll see you next time. Take care. Bye-bye.